Dow down, blame Donald. Will this actually be the last rate cut by the RBA? And is it time for Josh Frydenberg to stop looking like a kangaroo caught in the headlights when asked a hard question about the economy? I'm Peter Switzer and I'm mad about money. I'm also mad about Paul Rickard, who should be sitting here, but instead is on holidays in Europe. Do I hate Paul Rickard? Yes, I do. ... temporarily. Now, the Dow is down pretty solidly overnight. How come? Well, a lot of bad factory numbers right around the world. And do we blame Donald Trump for this? Yes, we do. I will happily say Donald had a good reason to take the Chinese on. The Chinese were playing really hard ball with trade. They were stealing IP, and they are stealing IP. They play shockingly hard ball with anyone who wants to do business in China. So he needed to bring them to book. But this whole trade war is going on too long and it needs to end. If it doesn't end soon, these bad factory numbers will be bad service numbers, and that's where people have their jobs. About 80% of most Western economies see people employed in the services sector. Factories are being affected because trade and tariffs are on products, not services. So this is a really interesting point to talk about. Trade deal has to come. October 10, the US and China meet in Washington. Donald Trump has been going out of his way to indicate that things are getting better. If he turns around and pulls another stunt like, I'm not doing business with these guys and I'll slap more tariffs on China, this could get ugly. Wall Street could get sick and tired of Donald, and then in the end we'll see a sell-off of the stock market. If we see a sell-off of the stock market, we will see a recession, and all those doomsday merchants, those so-and-sos, could be proved right. Now, will the rate cut we saw yesterday from the Reserve Bank be the last? Yes, it should be. Now, how could it be? Because I'm going to say, most people think there will be another rate cut. Some might even think as early as Cup Day. That would only happen if the trade deal gets pushed right back, if Donald really carries on and it puts additional tariffs on China, then we would see something like that. So the bottom line is, if we see a trade deal cracked in October, that will help the stock market, that will help business confidence and consumer confidence, and I reckon the Reserve Bank will hold fire in November. A lot of economists think there won't be one in February, but I reckon if there's a stock market turnaround of great significance, which would come with a trade deal, I think a lot of central banks would hold fire on cuts, so this could be the last. But if we don't see a trade deal and fast, there will be more cuts and things will get serious. And the optimist you see, Peter Switzer, will become pessimistic. Now finally, and this is linked, is Josh Frydenberg doing an impersonation of a kangaroo caught in the headlights far too often? He's the treasurer of this country. And people keep asking. I saw even this morning on the Today program where I was there plugging my great new book, Join the Rich Club. Ross Greenwood was on before me and Ross was interviewing the Treasurer, and he basically said to him, when are you going to give us tax cuts to stop the need for rate cuts? Rate cuts aren't working greatly. They're doing a bit of, they're helping a little bit. House prices are starting to rise again. A bit of positivity is creeping back, but not much. We need substantial tax cuts, not just the ones that were thrown at us at the budget, which are now starting to sneak through. We need some real tax cuts and even some significant government spending. If he doesn't unleash the strings on the Treasury coffers, the Reserve Bank will keep on cutting and we'll go to zero, and we might even see negative interest rates. All these things would be crazy. And in the end, even though I like Josh Frydenberg and I taught Scott Morrison economics many, many years ago, I will be very critical of these two guys. They need to get stimulation into the economy before it's too late. And the fiscal policy, the budget way, is the best way of doing it. A mini budget would be a damn good idea. And then Josh could look like a leader rather than someone who is stung like a mullet every time he's asked a question around, should there be some fiscal stimulation? Yes, Josh, we need fiscal stimulation. Finally, let me tell you this. On Thursday night, our property show is out, and it's the property punch-up of the century, round 2. Round 1 was Chris Joy versus John Adams. Chris won in a canter, though John thought he won, but he didn't. And now the big kahuna, Steve Keen, lines up with Chris Joy, and you should see these two guys go for it. Steve still believes house prices can fall by 40%, and Chris Joy says, ain't gonna happen unless there is an unbelievably serious recession. You've got to see this. Tomorrow night, just Google, YouTube, Switzer, Financial Group, up it comes, and become a property expert. I'm Peter Switzer, and I'm really mad about money. What you're about to see is Switzer TV Property, which is shown on Thursdays on our YouTube channel. And this is the show where we try to make you an expert on property, and we do that by seeking out the expert who can make you that. So welcome Steve, welcome Chris. Let's just start this debate off this way. The more controversial character in the debate has to be you, Steve, because last time we talked, you still believed a 40% fall in house prices was on the card.
Well, first I'd say I love Steve. He's a good mate, but this is a debate. I've got to take off the gloves. I think we're going to have some serious intellectual fisticuffs, especially after I dusted up Steve's acolyte, John Adams, on
Please.
absolutely
Come on.